Okay, everyone, and welcome back. And I was pointing out to Paul, you can see it's a completely different construction than the way the gold was, where the gold was starting to tire out, and we said that it was susceptible for a pullback. And we said the same thing here with the euro yesterday because we saw the makings where we could make a marginal high, and it looked like it could be a little bit weak. We saw the pullback. Right now, we're back in that same area, but you're going to have to let it give its dues. If you try and take it on, you're going to have a fairly wide stop because we could, if the dollar takes one more skunking, we could make it up here to the 816. And you see here we have the 816 up here. Personally, I think that any moves into the 80s, 90s again, just like I said yesterday, they can. I think there's a good chance that we can get above these highs right here. I really do. And they'll goose some stops, and the stops may just run out of gas right here at 8. But like I said, this is not this euro is not in the same place technically as come back here as the gold market was yesterday. And you can see that here. Now the gold had a phenomenal run. And I'll be doggone, I would have thought we would pull back from here. And we got up here and we talked about the 1220, it held, we pulled back. I'm thinking, okay. And I thought we were going to get some support in here, but I thought we'd eventually, remember I told you, I thought we were going to eventually make it right here at 91. And then we'd rally back up probably close to almost 12. And then we have to come back down to 81. I mean, on that particular day. Later on, I was talking to other people and I thought, okay, here's the first support. You know, they're probably going to make it down here. And look, lo and behold, look how it came all the way right back up. And we actually made a marginal high by just about, I don't know, about $1 or something like that. And we pulled back and it looked like, holy smokes, they're going to try to make a run. But you could see the market was getting tired. I mean, it was, this is a 30-minute, that was a 2-hour. But you could see time was stretching and stretching. And we talked about that it was susceptible. And I don't know if I got to say it here. I mentioned it to some other people. I said, hey, it's a short in here. It's setting up for short. I go, and I did mention here about the 1530. I go, as long as it doesn't get above 1218. And I even told them, I go, we should be running out of gas somewhere between the 16 and 18. I go, really 16 and 17. You don't want it to get above 18. If it gets above 18, then we can go higher. And sure enough, we start breaking down, look, and then, like I said, it succumbed, to the selling, and we made those moves lower. But this is the euro as it is right now. It's not, even though the euro we're looking at 2-hour, the euro it's not the same market. Matter of fact, I tell you, let's make it easier. Okay, so this is the gold on the 30-minute. Let's take it the euro on the 30-minute here, and you'll see it's not the way the gold was yesterday. So look at the euro on the 30-minute. You see how it's still showing strength here? Now I think, like I said, it's overdone. We got to 758. We did get a pullback, decent pullback. But I'm saying is it can still push higher. You see what I'm saying? It can still try and blow some people out. Whereas gold yesterday, remember, gold's had a far better phenomenal run than euro. But we were at a stage in gold where, hey, it was on its last kicks. It wasn't going to take too much to kick grandma down the stairs. And sure enough, that's exactly what happened. And we even talked about it, and I mentioned to other people, I go, really, that we were at that 12:15:30, we were talking about it yesterday. I said, this 12:16 and 17 should be good. And I go, you just don't want it to get above 12:18. Get above 12:18, that is not good. And we succumbed, and it fell. But technically, gold was in a lot weaker position on a 30-minute chart, even though it's had a far better phenomenal run than euro. But on the 30-minute chart of recent, it was far out weaker in that technical standpoint than the euro is here. So that's what I'm saying, you have to be cautious trying to take on the euro too early. Or if you do, you better be ready. Lucas says the dollar's starting to decouple. Oh, he said from the ZBs. Okay, because he was saying ZIs. Oh, the ZBs. Yeah, and you think about it, because that's another thing that makes me a great point. We're going to get to that. A good point that Luca brings up. Let's take a quick look at the bonds. We're still going to hit the majors first. But this is what I was cautioning some people earlier, is this is what makes me wonder, not makes me wonder, but makes me think that even if we blow stops on the euro to the upside, that it's questionable how far the euro can go, because look at the bonds. They're over here hugging on the toilet. So if the bonds were to take another dip here, like this, it's going to be pretty tough for the dollar to sell off any further. I'm not saying honest says the dollar's weakening. Yeah, it is. My point is, what you want to look at is how much farther or how much more could it weaken. And when you see the bonds here, and I mean, Lucas says, makes a good point. Hey, it's diverging from the bonds. It actually has been diverging from the bonds. I mean, if you look where the euro took off, and now we're up here. Can the dollar weaken further? Yes, but I tell you what, if the bonds break lower from here, it's going to have a tough time trying to make an extended move. You see what I'm saying? So my thinkings are, if you got the euro hitting new highs, I don't see it galloping to another leg up, something like 850. I don't really see that. If the bonds break even lower, that's going to be dollar supportive. It doesn't mean they don't diverge, that they're not correlating, but it's going to be hard for the dollar to make a new leg lower if the bonds break lower. It'll doesn't mean the dollar won't fall, but it'll limit, I would think, the extent of the fall. So anyway, let's get back into the majors. So my point is could the dollar continue to weaken? Could the euro continue to move? Yeah, it can, because we're at a point right now we can goose some stops. My point is if you saw takeoff, you'd want to look at it from a leery eye. And what that means is if you were, let's say, I don't care, I'm bullish euro. Okay, fine, buy it. All I'm saying is watch it when it comes up to any key areas. Well, you want to look at the bonds, because if the bonds break lower, then can the euro move higher? Yeah, but you want to look, say, wow, you know what? The bonds are breaking lower, and here's the euro above 8. Maybe I ought to tighten up my stops. Maybe I ought to go in and take this profit. Maybe I better not add on another position if the bonds are going even lower. That's what I'm saying. Oh, Anna says, actually, sorry, she says the dollar strengthening. Well, I don't know if it's strengthening. I mean, unless you're looking at it on a 5-minute chart. Because look, you got the euro sitting up here, and the euro is not too far from it. It could hit some stops. Now we're in a good area. Here's that 758. But anyway, let's get back into the rest of the stuff. So one of the move, and we already talked about the cable. One of the markets we also talked about was the Canadian dollar, and we'll move into that. We saw, we covered the, hang on. Sorry, I had to clear my voice, clear my throat. We covered the Reuters story about the Trump, putting oh God, can't even, it starts with a K, can't even think of it. The Keystone Pipeline, putting it in, the Keystone Pipeline and opening the door, and then and what the gist of the story was, because some people have come in since I may have missed it. So it said, I'll just read a couple of paragraphs. The Canadian dollar hit its strongest close in a week against the U.S. counterpart as Donald Trump signed an executive order putting the Keystone Pipeline back in play. Also, another thing that was noted on the story was they felt that any stuff coming out of NAFTA on that was really going to hurt Mexico and not Canada. So anyway, you saw the Canadian dollar strengthen, which obviously this is a dollar versus a CAD, so it's going to work inverse and weaken. So we had talked about, we made up here to this level. Here was our resistance here. We thought we could even make it up to 34.07. I thought they were last week, going to trigger 34.07, then pull back. But they did run up again out of gas against this level here, and we had support, and now we're starting to break down. And the thoughts are, hey, I think what it's now going to start to look at is, hey, things aren't so bad for the Canadian dollar. So the tone started to change. We've had a phenomenal run overall in the dollar CAD. We've gotten to a point where it's starting to run pull back. But I think that at this point, we're probably going to have to do further work and have to come down here. Because now people start to flip the other way and thinking, hey, you know what? Maybe now the Canadian dollar is going to strengthen a little bit. Things aren't so bad. So where could we go? I think we're going to make a move towards this 129 now. I mean, now that the sentiment's starting to change, let's take a look and see what we're at here along this line here and see. So if we come back, see from here to here, let's take a look on a fib. Right there. So the 50% comes in, and we already came down there. You see here, there's a 61% there. So the 61% comes in at 29.83 or 28.93. So let's mark that off. Kind of hesitant because we've already bounced off the 50%. Blake would always say if it takes out one fib, we found it's rare that it would stop at the next fib. So just for information, we're going to list it. But if we were to get lower, I think we could make it down to 78%. But for now, where would we find support? My point is it would coincide with this 29.09. So the high was 35.99. I remember that part. And let's find this low. I think it's 24.60. I think it was. Hang on. Yeah, 24.60. And we have the support here. I've got 29.09. So we're going to mark. I think the tone is changing for the dollar CAD. For right now, we got this 30.02. We're going to go and mark that off. I mean, we're going to mark it off. I mean, it's already had a pretty good fall. So for today, I'd say 30.50, and I'll show you what I'm looking at. But I think that the market is set up that eventually it can make it down to 29. But here's this area here. And we've already had a phenomenal fall already. So let's be reasonable. So it's going to come in at 30.50. This has definitely changed bearish. And resistance. I think they'll be selling this thing so we can get a pop, or if we steady ourselves. I think resistance is going to come in right there. So that's 31.90. And so let's take a look at the dollar Swiss. As I said, I want to go and save these settings. Yeah, the Tish says if you have enough lines, something's likely to be relevant. Well, everybody's got a smart remark to make. What I do is I try, and I already told people, and the Tish is the one that complained also about he didn't think my charts were clear enough. So, appreciate your negative remarks, Nitish. I look for areas where we talked about that, where a market will go to in relation to where everything else is moving. So we talked about, hey, Amanda says, hey, could make it up to 2670 here in the cable. And is that confluencing with some other things? So I'll try and remove lines, but like I said, that's the way that I look at the charts. If you're not happy with the webinar, Nitish, you don't have to come anymore. I mean, seriously, like I said, it seems lately the only thing you have to say is offers negative remarks. Like I said, I refunded, but it's a free webinar. So let's go on and go into the dollar Swiss. And we've had 99.30 and 0061. And we've had that key 99.58, which it came down to, and it looks like we're coming back here, and we've got the 50%. And we had, the way we came up with this 99.30 is this level right here, right in here. And so, once again, since we're short-term trading, we're just looking for areas. We talked about this 120. And what I usually do is I'll look for, okay, if they blast past an area, is it confluencing? Are we seeing another market start to run out of gas? And so it tells me, hey, look, maybe we're going to move to that line. You see what I'm saying? And so I try and look for confluences where we might be, having some issues right there, where the market may go in and stall. I saw one of the guys, he mentioned, hey, he got short based on this 78%. I saw him make a comment right now, and he's keeping a tight stop. So we try and look at, hey, look, is it confluencing with any other levels? And you can see how the market will move, and then all of a sudden, what was one support, now you take off, and now if it's coming into another area, you're looking as like these markets just move level to level. That's what I'm saying. I know sometimes people say, do you think it's going to go here or there? Look, all I'm looking at is these markets just going from level to level. That's it. So I'm not saying, oh my goodness, look at this level. I just hit it so perfectly. No, it's just like you can see here this 120 and how that was significant. And on the way back, we're having trouble with it. So once again, the markets, all they do is remember the levels. They're just moving because once again, these are leveraged markets to start with when you're trading foreign exchange. So if they defend a level, it's the same thing. If they defend a level, then fine, they're going to bounce off, and all they care about is the next level. It's not a matter of where the market can go to. What do you think it's going to go to? The markets are just moving level to level. That's all they're doing, and that's the best way to go and look at it. So here in the Swissy, it's going to still stay the same. Okay, it hasn't really moved. Only thing I will say with the dollar Swiss is you would expect this to be breaking lower if the dollar was going to go on and really unwind. So I would have expected, because we talked about the euro, I'd expect the dollar Swiss to be breaking here if I thought, okay, it looks like the euro is going to take off. The fact that we're not even close to breaking down here in the dollar Swiss, we haven't even taken out the lows here. You see, we're not even that close to the lows here at 99.58 that were set just in the last 30 hours or so. Okay, so that makes me question whether we have the juice to goose them up here in the euro. That's the way that I look at it. I try and look at it across the board. So that's like I said. All I can do is share with you what Blake will make a good point because there's no right or wrong way to look at the markets. So this is how I try. I don't look at I think it was Luca that was mentioning about the bonds earlier. So I try and look at across the board. I know Blake did the same thing. I look at markets a little bit differently than Blake. But like I said, so if I see the euro and I'm thinking, and I was telling Paul, I go, hey, be careful. We could push them higher. But then when we look over here, like I said, the dollar Swiss, and I use the dollar Swiss a lot to trade the euro. Sometimes the correlation can be like 95%. Lately, it hadn't been that good. But if the euros looks like it's going to take off and hit a bunch of stops, not like take off like 50 pips, but take off like going to the 780s, 790s, then I'll look at the dollar Swiss and I'll say, well, this should already be breaking. I mean, if the dollar Swiss is trading here, I'm thinking, oops, it looks like that euro might really pop off. The fact that the dollar Swiss is holding, it hasn't even come to the lows here. You see what I'm saying? It's already holding up really well. I would have expected the dollar Swiss down here. You see what I'm saying? With the euro being up there. Now, of course, it's trading against the Swiss, but I'm just saying, and there's this, the Swiss franc has had some issues. The SMBs has made some comments, so that's made the, you know, put the Swiss, made it trade a little bit differently. But all things being equal, when I look at this, I go, wow, you know what? Maybe the euro doesn't have the juice to bust up here. And we saw the euro up in here, now it's starting to pull back. You see what I'm saying? So if you were of the ilk, like you're saying, like Paul was, Paul said, hey, we're trading in a rising wedge, you know, or ascending wedge. So if you're saying, you know what, I think the euro is just going to be weaker. I don't care. I think it's going to be weaker. Yeah, then you can hang your hat on this dollar Swiss and saying, look, when I look at the dollar Swiss, hey, it's holding up well, really well. So it doesn't look like the euro will have the juice to go much higher. And then you may also look at here. We pointed that out earlier. Look at the bonds. We said, if the bonds break lower, and they're already in the toilet, look, they're already breaking lower now. You see what I'm saying? From where they were just a little while ago. You see this? We talked about that. I said, if the bonds break lower, it doesn't mean that it would prevent the dollar from falling, but it's going to limit the dollar's fall. Because they're already in the toilet. So if the bonds break even here, and we can make a new leg, it's going to limit how far the dollar can fall. Let's put back the euro. Hence, you see the euro here? See it's struggling? This is how you try and put the pieces together. It doesn't guarantee you anything, but it helps you. You see what I'm saying? If you look at you know, those that would follow me on the European crossover, now would say, you know, I came up with that is my little phrase. Watch the ZB. No, it's all about the ZBs. It's all about the ZBs. That's what I'm saying. These little things will help you to enter, you know, come in at better levels. You know what I'm saying? Because what might happen is, let's say Paul is thinking about, he was talking about an ascending wedge. So he's thinking about trading the euro short. And he goes, so he says, you know, I think it is, I'm not sure, whatever. And then he may already be short, because like I said, he pointed out that it's an ascending wedge. But then he might, by the time he gets down, let's say he gets down to 718, he goes, I knew I should have shorted it. I was so sure, I felt confident, I should have done it, I should have taken it. Well, and you don't know. So you're thinking, you know, I don't want to take a loss, or I mean, you know, that's part of the game, but you're thinking, I want to come in at a good area, I want to feel that I'm coming in strong, I do see an ascending wedge. Well then, if you're looking at the euro, then take a look and see what the dollar Swiss is doing. We talked about that. The dollar Swiss is not near its lows. So that gives me a thought that, looks like the dollar's defending here, okay? Then we look at the bonds. The bonds are breaking even lower now. So we're like, the bonds were already low to start with. And if they're breaking lower, that's going to limit the dollar's fall. So then that gives you the, the confidence to say, you know what, I'm selling it against 762. I'm fine with it. And, you know, you can see here, we'll continue to roll here. Or even if you're thinking, you know, let me take a look at some other things in here, and you're saying, you know, I was kind of neutral, but I think I'm going to go on short the euro now. because it looks pretty good. I mean, the bonds are breaking down. That's supportive of the dollar. The dollar Swiss is holding up really well. Look at it. We may even have a hammer bottom here in the dollar Swiss. And you can see here, well, the cable came up and is into this key fib. We might see people kind of like, not in a big way, but maybe stepping in and covering some of their dollar shorts across the board. That might be supportive. That's the way that I try and look at it. And when I mentioned about going from level to level. So let's go into the next one. So we said the dollar Swiss is the same. So we'll take a look at the dollar yen. Actually, once again, we went well over our break again. So we're going to go into the break, and we'll be back. And thanks for joining us here on the crossover. Yeah, Amanda said that's kind of Amanda. She said information like this can save you from making a costly trading decision. Thanks, Amanda. I appreciate it. Amanda is an excellent trader, by the way. She's been around since when we were doing the European crossover the last couple of years.